Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream is about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars on the process you see. This is based on the business of trading, and trading might be a little different, or at least the business, than what you imagine it to be. But like everything, it has to resonate or speak to you and make sense. And so let's get going. And thank you, Stephen. How we doing in YouTube? And if you're visiting in YouTube, thanks for visiting Trader Lab. There are also links in the bottom of YouTube if you're interested in the Bookmap Discord Trader Lab community. There's no cost for it. So as long as there's no cost, it might be an environment. It's made up of serious traders. It's about the business of trading. It's not romper room. So, and there is no Holy Grail. So in the meantime, while you're looking for the Holy Grail, if you haven't located it yet, nobody else has either, you might want to consider your approach and if you actually can generate an edge. The business of trading is built on edge, in my opinion. So we'll get into that. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but if we get into real time, as they say, we'll talk. Now, let's get into this right away. We got a lot to talk about. It's been very interesting the last number of days, of course. Now, this is the higher time frame, and this is yesterday's RTH. Now, yesterday, initially, we were working alongside, and this was our target for the day, 68. We didn't quite get to it. Then we turned around, so it was in the morning, it was longs, and we had a lot of bullish news yesterday. And there's an old saying in trading, it's called buy the rumor, sell the fact. So all the good news was in there. We had CPI report, we had the news out of London about the China tariff negotiations, all was very positive. So when you get that follow through, if it can't keep going, then we are looking for sell stops to come out. That was yesterday's plan, and you'll notice yesterday's low didn't do it. How about that? Trading, what a joy. And that's part of the random distribution of outcomes. So I'm going to go a little further into this, but I'm going to tell you a little bit about my plan for today, and that my plan really didn't work out. So, and what does that mean if you come in with a plan? When I come into the market, I have obviously a trade plan, because that's what we talk about. And then I'm looking for the market to align with my plan. Now, my plan is prepared before the RTH open. So the ETH is still ongoing until it closes. And then, of course, we get into the RTH open. So whatever's happening in ETH, which is the latest auction, or interaction between participants trying to figure out what this thing is worth, gives me the most recent information, and then I adjust from there. So you'll see how these pieces might come together. And of course, you have to vet everything for yourself. There is no right way to trade. Hopefully, the right way to trade after you do some research is going to be which trades align with the current condition of the market where you have a statistical edge. That means you've done the work, and you wait for your bus or your trade. And if you don't have a trade, you don't trade. And that's very difficult for most of us because of this fight and flight mechanism or stimulus that comes. And, you know, if you've ever have a dog that chases a squirrel, it's the same thing. It's a triggering process. That was a great analogy. So we are subject to the same thing. The hunter in us is triggered by the fleeing squirrel or rabbit or whatever it is. And this is all primal wiring. So we react to this emotional stimulus, but we'll talk about that. So we had yesterday's low and this low. What do I know about this? The market is long. I know the trend is up, but I know I've got sell stops under here, and under here, and under there. So if my initial plan was to get down into this and then go from there. Because if we take the week longs out, remember how the market works. The market goes down to grab inventory under that low to go up. The market goes up, we can come down and take out the inventory. So that's my plan. And that was my plan at some point yesterday after the long side failed. So I was trading shorts. Anyway, not important. Let's look at this a little more detail. Now, this is a combination of market profile, which these letters represent 30-minute brackets. That's what it used to be before we had volume. And this is what the volume distribution looks like. Now, here's the elements. And this is where my plan initially was looking for sell stops, sell stops, sell stops. I said, we got a good shot at this. And here's the other piece. Yesterday, we had, this is a target, 68 actually, 67, 68, that orange line. And that was the longs in the morning. Not so much. And then we were rotating around here. So I was working longs. Actually, the first trade yesterday for me were shorts. And then it was turn around, get long, go for this. C'est la guerre. But here's the important piece. This is a distribution. By the way, what is a distribution? An auction. What's too high? What's too low? What's fair? And the thing about fairness is high volume. The analogy I use and what helped me a lot is not trying to create complexity and something that's nebulous. I want to create an attachment to something I already understand, or linkage. I understand shopping, right? I understand shopping. You do too. If its price is too high, you might not pay it, and we run out of volume. Now, somebody needs a can of tuna, $2 for the casserole, is going to pay it. But there's not going to be a line in the store for the tuna, $2 a can. If it goes on sale at 50 cents, a clearance sale, and you are a tuna lover, you're going to throw them in the cart, maybe 5 of them, if you perceive it as below the fair price. Now, we know it's too high. We're not going to pay that, but where's too low? Maybe it's down here. And if I have demand or absorption of the sale price, because the buyers think it's undervalued, at some point, the sellers are going to start raising the price back up because they have the demand. And where might it come? Back to retail. This is the shopping experience. Now, the thing that makes us kind of crazy is this process is happening in all time frames, or as I think of them, fractals. Let's look at this up here. The high volume is here. In this little store, too low, too high, retail. And what's in the higher time frame? Retail. If this becomes too high, and I don't know until hindsight, part of the thrill, and I reject it, now I have this. So too high, too low. I'm not paying that. Same process, different fractal, but it's on sale. And the highest volume price, which is down here, or maybe here, was up here at the time. So my longs that I was taking, I took a long here actually to come to there. That was my last long trade. So outside in, that's called mean reversion. That's the mean retail. And if I break out and this is too low, what was too high? Up there. And as we say in trading, life in the fast lane, thanks for visiting. And we all got coupons to the buffet. But if you took a long, and I forget where it was, if it was down here, I can't remember. But let's assume it was here. This is resistance because the high volume is there and it's a retail price, and that's too high. What I'm anticipating is we'll come to the next higher time frame retail price that was left behind. The nature of the market is to check prices. Shopping. Is everybody tracking so far? How are we doing? Everybody conscious? Please give a like, by the way. Now, let's get into today. Based on what we know, I'm going to take you now to the open, and all this information is available to you in TraderLab. Here's the thing about trading. We cannot predict anything. We can suspect what might happen. The key word in trading is maybe and randomness. Let's assume and let's try to accept something that is very hard for us to do. We are seeking certainty, and I always have to mention this because we have new visitors, and thanks for visiting TraderLab. If you can accept that you're in an environment that's 100% random 100% of the time, you cannot solve for certainty and confirmation. You can solve for maybe. Maybe it'll do this, maybe it'll do that, and where might it do it? And that's what the profile is about. The profile is about distributions of volume. Now, the other thing about the profile or the auction market theory is the behavior of the auction is happening in multiple time frames, whether it's the intermediate that I just showed you or whether it's a little microstructure, it's all the same. So I kind of think of these as stores because it's shopping. What's too high? What's too low? What's retail? And what is this retail? How can I have a retail price here and have a retail price here and have retail prices all over the place? Well, as the market moves around, what is it really doing? It's checking. And the participants in these fractals, there's no clock involved in this, so I don't use time. And I know most of us start with time, 15 minute, 5 minute, 2, doesn't matter. But it's fixed. The market behavior is not on a schedule. It is based on participant behavior. So I don't use time. I'm looking at the interaction, and that's what order flow is about. Interaction of behavior of participants, and then what is the verdict? What's too high? What's too low? What's fair? And if what we find is what we think is fair is not fair, because we leave it, then we have more information than we had before, and maybe we can base some trades on that. RTH open. Where are we opening? Now, this is before. Now, there's a couple interesting pieces here. And this is kind of what threw my plan, which was looking for shorts, and it threw my plan into a bit of a tizzy. How do you like that for a trading term? We'll put that in the book I'm not writing. The microcomposite volume point of control. Let's come back to the higher time frame. You have to see how pieces might fit together. What is this? I think I'm losing my mind. Here it is. Roughly 1613 is the fair price for this whole behavior. That's a swing low, and I think I got the wrong one up here. Let me look a little further. Yeah, this is the right one. Yeah, 6013 is the highest volume from this swing low where we did the inventory grab to up here, yesterday's high. So remember, and 68 was yesterday's target, no bueno. So what do I know? 13 is the highest volume. When you go up in time frame as you think of it, this is the high volume or the fair price. When I go down to yesterday's RTH quote time frame, the yellow line was the highest price. These are fractals. Then as I go down further in quote time frame, each of them has its own. So this is like you might think of a vertical integration of time frames. And I think of them once I'm out of the RTH and I get into the developing time frame, I'm no longer using the clock. Other than the RTH open and close, I'm using the fractals or the interaction. I hope that makes sense. So now this is my retail price in the quote higher time frame, intermediate time frame. Open is at a fair price. Not good for a short. Let's look some more. Right before the open, and I still got more to tell you, so let's be patient. The overnight ETH volume point of control or retail price, remember the yellow line is the retail price, is here. What does that tell me? The market thinks this is a fair price. I can trade both sides of this thing, and I am not thrilled. Why? This is a fair price. What does the market tend to do at a fair price? If this is, remember, retail, what does it say? Possibility for two-sided trade in here. Okay. So, it's like, oh, shucks. Now there's more. Really? Yes, there is. We are opening. Look where we're opening. Let's go. We got it. This is all the pieces before you put your first trade on. And even then, clueless. Not ignorant. Truly clueless. Let me try to here. Trying to look for some levels here. There you go. We are open. This is called the value area. A value area is where 70% of the volume took place. Why aren't these levels on here? Some of them are. I gotta label these things. I do this because I can get very myopic, and I found that it won't register because there's just many elements running around here. This is very important. Settlement is important. Okay? So, and I'm going to give you some probabilities now and statistics, but you need to understand what this all means before the fact. And again, nobody predicts anything in this business, or at least if you can, come to Trader Lab. I'm always interested in somebody who can help us do better. And there's nobody has a monopoly on being right. There is no right. How do you know what's right in this business? What's right in this business is having an edge. It means you got to do the work to know where it is. Then you take your trade. And just like the casinos, it's random. So we're opening in yesterday's range. There's the ETH low. And I am looking for the stops to come out. Remember my plan. As they say, fly in the ointment is I'm opening at a fair price. Wait a minute. Yeah, right here. I'm opening here. And again, if I'm opening in a fair price, but I'm out of value, what do I anticipate? I'm opening range, but I'm not opening in value, which is up above me. What does that mean? The market is slightly out of balance. What can I anticipate? Overlapping trade, or something called a normal variation day, where we take out, and we can do something else. Two possible. We can take out only one side. Oh, don't forget, stops are below here. This is part of where the drool came in from this morning. And the other part of it is we had what's called the neutral day yesterday, and neutral days are two-sided participants. In other words, the longs were in here, the shorts were in here, and it was like a shootout at the OK Corral. And we failed to take out day before yesterday's low. Now, that doesn't mean we won't get there. What it means is there's more stops under these lows, and eventually means somewhere out in the future, we will return, because that's the nature of the market. It rotates, right? And if the market gets too long, the sell stops pile up underneath. And then remember how the market works in all fractals and time frames. Market goes up to go down, market goes down to go up. Now, if we're opening in range outside of the value area, what does it mean? We can trade in the direction of the imbalance, but monitor for continuation. Market is rejecting former interpretation of value. So that is suggesting possibilities for shorts, but the problem again is this. Okay, so we have a problem. Let me give you statistics now, and you have to vet these for yourself. So we're opening lower, below settlement, inside of yesterday's range, but outside of value. Lovely. Kind of a conundrum. Lower inside of range. So what does this tell us? And you have to vet everything for yourself. And I do this because I want you guys to understand, or at least get a sense of what a trade plan is. The trade plan is your guide. Remember, the market's 100% random. We need not to be random. We need to be structured. And our job is to attempt to define the condition of the market, take trades that are in alignment with the current condition of the market, and if we have an edge, even though the outcome of any individual interaction with the other participants is random, same as the casinos. They pay the gamblers, gamblers pay them. But the casinos do really well because they're over time extracting the dollars from the gamblers. This is not a right or wrong business. This is an alignment business and a business of probabilities. This is not right or wrong. It is not prediction. And I know we want prediction and certainty. It's because our nature and our wiring has nothing to do with the business. It has to do psychologically. Well, you can't solve for what you need psychologically. You need to be solving, in my opinion, for what you can't have. You can't have certainty. You can have probabilities. So what do? Well, the casinos have a business model. I think that's proven. And if they could have figured out certainty, they would have done it. They can't. So what do we anticipate? Opening at a fair price, rotational trade initially. Now I'm going to show you some trades. And these are structured trades. Some of them are very advanced, and I'm going to show them to you, but they are not trades that developing traders should be involved in, because the first trades, the open, is the highest risk place other than news and disruption for somebody can trade. And today's even more risky because of the location. But what does the market tend to do? The market is going to do what? Rotate. What's too high? What's too low? And of course, the joy of all this is clueless, but not ignorant. I'm going to show you advanced trading. I'm also going to, again, caution you that this is not for developing traders. This is where you've got all the other pieces and structured trades vetted. You're a profitable trader, and this is the last place. It's the last place because it requires the highest skill. And we don't develop skill unless we practice and take our lumps elsewhere, become disciplined, and just basically can detach from the outcome as best we can and accept that nobody knows anything. Because what we know is what might happen, but we don't know what will happen. Okay, RT, everybody with me? And there's more statistics, I forgot. Lower in range. Previous high or low, 87% probability. Taking out the ETH high or low, 98% probability. Getting to the ETH mid, 81% probability. Getting to the overnight volume point of control, 80%. It's a problem because of where it is. Getting to the ETH low, 69% probability. Taking out the first hour's high, about a 69% probability. Getting to the previous value area low, 68% probability. Getting to the previous point of control, and there's a little debate where that might be. I had conflict on that, so I decided, well, I'll show you. Settlement, by the way, getting the settlement. Where is it? I just want you to know how statistics, 74% probability, and it doesn't mean the market will ever get there. It could care less about us or anything else. Here, 45. And what was that probability you're asking? I know. And you're writing these down. 68% probability. How might I use this information? And value area high. Let's put that on here. What's the probability of the value area high? 56%. Starting to go down. Okay. That's before. And remember, yesterday's high or low. Don't forget that one. 87% probability. And we have a naked target up here at 68 from yesterday and yesterday's high. Remember all of this. So that's the lay of the land before the market opens. And other than where we opened, which is a problem, anticipating slosh, and an 85 or whatever percent probability to take out yesterday's high or low. So, and the ETH low over 90%. My orientation starting out was shorts. Just saying. Now let's look at the early trades. And again, this is not where, if you're in Trader Lab and you're trading this and you're not a profitable trader with the other structured trades, I want you to meet FOMO, because if you don't have what you should be doing with this, what I'm going to share with you right here, this is going to train your mind for speed and pattern recognition and order flow. It is not going to be something that most traders can do until they have the other pieces. Now, FOMO is what makes us think we can do it all. And we don't even understand FOMO. We don't understand emotional stimulus or dopamine or the hormones that are released. All this is going on in your brain. And I'm hoping you understand driving drunk is not a good plan. You probably wouldn't do it, hopefully. Well, when you're under the influence of chemicals that are released in your brain as part of engaging with risk, fight and flight, and FOMO, you remember the dog chases a squirrel, same thing, we're chasing the market, and then regret, and I shoulda, all this nonsense and lunacy, and I want to say it is lunacy, is going on under the hood. And in Trader Lab, we talk about how do you interrupt that? Because you have to. You're going to still feel it. How do you interrupt it? Well, the first thing you do is you learn how to trade, and you understand if you're not a profitable trader that you don't want to keep doing the things that don't work. What do we know? We can come here. What do we know? We can come here, we can come there, and we can go to zero. That's what we know. First trade, resting liquidity, important. So what does that tell me? I have sellers. Here's another thing. Now, this is order flow. I'm going to go into a little something else. How long have these guys been in the book? I don't even know. Long time. Okay, so there, and this is in the ETH, I think. No, it isn't. I'm sorry. This has been in the book since over here. Okay, that's my first area to be looking for a counter rotation. Up here, resting liquidity, potential for counter rotation. Okay, so let's just kind of watch how this all manifests itself. Now, very dangerous trade, okay? Very dangerous trade. Now, I was talking to a trader this morning, one of our traders in Trader Lab, and we just had a quick discussion about this. I said, now this is a short. What do I have? Now, this is an advanced structured trade. So this is not where you start. This is kind of where you end up. Part of the problem with this is this trigger right here happens at 39 seconds in. You see what I'm saying? Most developing traders cannot deal with this. Absorption is here. So you would see the absorption, and this is an advanced trigger, but I want to share it with you. You see the icebergs. You see the buy stops coming out. Thanks for playing. Broker sends you a gift basket. And then this is absorption. Now, you don't know it's absorption. I mean, I see the icebergs, but you don't know that it's, why won't it just keep going? Aren't you asking me that question? I'm asking myself, why didn't it keep going? Why? Because there's sellers here. When the sellers get below the buyers, then, and the buyers were there, and I get my absorption, clueless, and I break below the buyers, I know I have sellers here now. And then I have my seller there. Why does it go up? Because the buyers here and here think this is a heck of a price. Microstructure. This sell delta are sell stops. Weak retail traders, risk adverse. I understand we're all risk adverse, but that's not trading, that's emotions. Absorption. Where were my sellers? They are up here. What do I see here? Liquidity comes in front of this. Might we call that front running? So in a microstructure, I'm seeing sellers. Now, this is called a developing volume point of control. And the problem with this is it's all in alignment with this. This is the retail price or fair price from the ETH, and this is the fair price from the intermediate time frame. Oh, joy. where might I go with this? Mean reversion would be back to here. And then, as Dirty Harry used to say, do you feel lucky? You're coming out the bottom and you're coming to here. So these are the statistics. This is your obstacle. In Trader Lab, this is an aggressive counter trend trade, and it's very difficult trade. So I would encourage developing traders to sit in the Barca lounger and just observe, screenshot, and learn to read. When you're using order flow and you understand market mechanics, if you will, in the auction, I don't use any indicators. They create a conflict for me, and I was really looking for the indicator or indicators, because we want to throw this kitchen sink at this thing to create certainty. Actually did the opposite. It created random inputs in a random environment. Casinos don't make the games up, and they don't play blackjack with 5 cards or 3 cards or 20 cards. They don't do any of that. They just play blackjack basically the same way. Well, if that's the case, then we need to be doing the same thing. Otherwise, we can't measure it, and it's going to have winning trades because gamblers have winning hands no matter what they do, because the cards are random and gamblers play cards randomly. Well, if we're doing the same thing, we can't measure it, then it might be absolutely losing proposition over time, even though we have intermittent winners. And I consider that catch-22, or for me, I renamed it Trader Groundhog Day, because I was always trying to fix something. Because it had winning trades, I thought it was make it better. The fact was, it didn't matter that it had winning trades. If it didn't have an edge, I was still going to be a loser. That didn't seem like a good plan. How's that working for you? It's Trader Groundhog Day. Too high in the developing time frame. Remember the shopping experience. Retail, absorption, sellers below the buyers. Liquidity comes in. Now, this is a bit advanced. I get absorption here. My buyers are here. There's the icebergs. They're absorbing. And my sellers are here. So I'm bracketed here. If my buyers can't get above my sellers and my liquidity drops, I now have a trigger. And the trigger is either here, very advanced, or right here. Right here. When I break under this, this is a structured trigger. Counter trend, depending how you define it. Now, I am trading inside. And this is called mean reversion. There's the mean. This is the fair price from the last higher time frame auction. This is Microstructure. So this was a short, and I didn't take it. I want you to know it is a short. And the target to scale is here. I'm not paying that. Retail. So if you took a short here, this is where you're trying to go. And there's enough meat on the bone to get risk neutral. Then what is the trade? Potentially to come out the bottom. And this is full session VWAP. So you had this also down here. So there was some interesting structure here. Resistance. Resistance. Look where we come. Resistance. What does it say? This is about language of the market. I'm not paying that. Microstructure. Come back and check it. You crazy? I'm not shopping here. Your tuna is too expensive. Break low. New retail price in the next fractal developing time frame. You got to be kidding. Too high. Too low. Too high. What was this? Retail from the ETH. What is this? Developing. Too high. What is this? Next developing fractal up. Developing daily time frame. I'm not paying that. I'm out of here. Support. Then if I get under here, looking for whatever. And what else? ETH low. All of these are viable targets if you were on the short side. Notwithstanding, this is the fair price. But the market can come under and revert back. This is mean reversion. What reversion trading is outside in. Now, if I'm trading as you think of multiple time frames, and again, I trade multiple fractals, it's kind of the same, but no clock, I'm trading back towards the mean. If I came outside, I can trade back towards the mean. This is the mean. So I know, and this is very aggressive, okay? And this is counter trend too. So just saying, just so you know. Overnight mid, what was the statistic? You wrote this down, 81% probability. And yesterday's low. What was the taking out the previous high or low? 87% probability. This is where this would be going, hopefully. Let's watch. VPOC migration. Let's look at the language. Too high. Now, too high. VPOC migration. Too high. VPOC migration. What am I looking for? Too high. Too high. What am I looking for? Too high. Too high. What am I looking for? Too high or too low? And I needed to get under here to go down. Okay? Let's follow the language. Sweep suggests counter rotation. VWAP support. Right here, my teeth chatter. But where's my resistance? There and there. Watch. VPOC migration. Going to zero, Lewis. Feels good. Going for yesterday's low. Having a wonderful time. Uh-oh. Right? So, where's my resistance? It's here. Where's my resistance? It's here. I get a sweep. I'm looking for this. Okay? Now, I didn't take the trade, but I want you to see it. How you can slice this apart. No bueno. And what happens? Let's talk about this. You're risk neutral, and I'm not discussing trade management. That's an individual thing subject to the rotations and fractal you trade. This is where there's big trouble. So you're out. You're done. Okay? That was the short. Buyers took control. Now let's look. VPOC migration. Let's take the concept. If this is too low, and this now is too low, I'm going to mark it. I call them a variable high volume node. What it means is this is where the shoppers agreed because of the volume. But if a price becomes too low, then if I leave it in all fractals and time frames, like it was here, too high, right? Well, this became too low. And I don't know that until the benefit of hindsight. And now above this, so the short's done. Now what? Now, when I get VPOC migration, my job is to try to get long. And I have a couple things I can do here. First of all, remember my target, yesterday's value area low. The long, this is the next target up. Yesterday's value area low. What was that statistic you're asking? About a 68% probability. Now, I don't know, of course, if it's going to do anything, how it might do it, where, because it's all random. Remember, 100% random. What I know is if I can't get in here, then I can reject it. If I was long, it's a target. That's what I know. So now I have to ask myself, if this, then that. If not, then what? If I get short, if this, then that. Take the stops out. If not, then what? Failure to do one thing suggests context is not aligned with the participant behavior. Now it's turned the barge around. So that I did not have a long here, but that's my resistance. That's why it's a level. Now I have to look at it. Now here's what I know. Let's talk about what I know. Not what will happen, what I know. I know this is too low. I get VPOC migration. It's the same as what's going on here, except now I have more volume up here. This is the new retail price. Let's look. VPOC migration. What happened here? Let's look. First of all, we blast off. We have liquidity here. we have our target up here for the initial obstacle, which is right there. So that's all good. VPOC migration. Let's look at the language. Too low. New retail price. Now, subject to your plan, we have a structured trade in TraderLab, and let's look how this might work. What do I know? Well, first of all, what I know is shorts are now done so far. I know that right here I have a sell sweep, and I'm anticipating a counter rotation. I know I've got buyers. Buyers are here. Sellers are here. Buyers are above the sellers. Sellers are here. Liquidity, icebergs. So I can see my sellers, and I get below my buyers. The buyers are absorbed here. Where are the buyers down here? They're right here and there. I get my sellers here going to zero. Watch. Why doesn't it go down? Same reason it didn't go up, because these guys are absorbed. There's a passive buyer here. Sell stops are coming out. I make a higher high. What does that suggest? North. What is this little consolidation right here? It's an auction. Too high, too low. Retail. The volume is here. Break high. Let me isolate this. I just want to show you something that you can learn in TraderLab that is probably not what most people are doing. Sellers, buyers, hey, what's happening? I don't know. Right here. Chop, chop, chop. These are consolidation, and a consolidation is an auction. It's the buyers are on one side, the sellers are on the other. We know that, right? So where is the volume in the microstructure? In this auction, the retail price is here. Where's my resistance? I'm just going to draw a little box around this thing so you can kind of see the optics. And the output of order flow is price action. Support is here. Volume is here. Retail. Sellers are here. I break. What does that tell me? Buyers are in control. Let's watch a little bit more. I pull back to where? Hold on. This volume that's here. Buyers are absorbing. So we have buyers here. I think I might put this in the wrong place. Should be there. Hold on. This is bothering me. Okay, I've got it there, and I've got volume there. Let's just put another little one here. So what I know is too low, absorption. If I break high and the volume is right there, I'm making higher volume. In other words, retail price. So too low, I don't know. If I break high, it's this and this as support. Resistance is this. Let's see. Absorption here, resistance there. Now, let's just hang out together and watch what happens. VPOC migration. Now, what do I know? I have it here at this high volume for a moment, and if it moves higher, it is suggesting too low. You can enter on the VPOC migration if it's vetted. This is right here at TraderLab. It's called VPOC migration. And what you're doing is right here, from here, we found a retail price. We broke high, which means the sellers here got abused. The buyers are here. They absorbed the seller there. I come back to my micro VPOC. In other words, in a fractal, this chop, 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 this is the retail price in this little store down the street from where you live. If this is too low and this is too high and I break away from it, I can come back to the retail price. And if my buyers were here, they'll show up possibly out here or right there. I get my buyers. This sets up a potential long. That's one piece. There's more. I get VPOC migration. Now, so this is a potential long, more advanced. This is a structured trade. What am I looking for? My buyers are here, retail price. In the developing daily time frame, higher time frame, with the context going up, let's look at it. Support, not structured, advanced. VPOC migration, support, long in the Trader Lab. We're going to try to come back here. VPOC migration, what is it telling me? Buyers are here, new retail price, too low. Let's keep following the yellow brick road. Value area, next target. We already came to it, but if in the developing time frame, if it's too low, and in the microstructure, it's too low. All of these give me opportunities for longs. And there's more. I know. Let's keep going. Where's my next targeting? ETH high. Remember, over 90% probability I take out either ETH high or low. Well, you'll notice we didn't get to the ETH low, and we didn't take out the stops below. That turns the card around to aim north. Any questions so far? Can you see potentially how you might get an alignment, even though it's all random? Are you guys with me? How are we doing in YouTube? Please give a like if you're finding this interesting. This is based on Trader Lab. It's an advanced trading methodology. Why is it advanced? Because it actually requires that you actually learn how the business of trading and how the market works. I guess that makes it advanced. It's not based on your indicators. That is not what this is about. This is a language. So what I'm doing is not complicated. What it is random. If you understand what is going on and how the market works, then our job is to try to define those conditions and get an alignment, and then wait for the market to come to our vetted structured trades. And then either, you take a stop, or you get a scale and scratch, or off you go. It's all random. Now, at 9 a.m. Central Time, we have something called the IB30, the first 30 minutes. Now, the first 30 minutes suggests if we get above here and into value, there's a high probability we'll take out the first hour's high, which is called the IB. So, and it's over 90% probability. In fact, taking out the first hour's high or low is about a 98% probability. Taking out the ETH high or low, remember, we missed yesterday's low, we missed the ETH low, is 97% probability. That's why when I get long and I get through this is my obstacle, then it sets up this. Okay? So if you're in Trader Lab, this is where the barge is aimed, and no clue. Rotations are random. So let's follow the yellow brick road. 9:30, the IB is locked in. And we have what? Almost a 98% probability of taking this out. This is a target. This is a target. That is a target. And what is the probability of getting there, you ask? 68% probability. Are you guys getting something out of this? How we doing in YouTube, guys? Please give a like if you find this interesting. If you're interested in this methodology, this is not a complicated methodology. Actually, it's kind of simple. What is the problem for us as mere mortals is the randomness. That is the part that creates the problems, I think. I believe anyone who comes to Trader Lab who does the work can learn how to trade. Of course, you got to do the work. And it's so nice to use indicators that do the work, right? Plug and play. Throw the spaghetti against the wall, and let's move that ATM in the basement. But If you've been doing this for any length of time, you might find that in spite of random winning trades, you get the same outcome. That's where I suggest you go stop and figure out why. And you can get those answers in TraderLab. And then, of course, what you do with those answers and how you apply it is an individual process. But what I've done is shared 60 PDFs of structured trades. And the job of an individual coming to TraderLab is to find not only how to speak the language of the market, but to understand the business they're actually trying to be in. It's not a business of indicators. It's not that you can't apply an indicator, but you need to know when it, just like structured trades, they're not generic. They apply under certain conditions. And the market can change and then change back to a condition. That's a different conversation. So we have at 9:30 the IB stat, over 90% probability and about, 68% probability of getting here. The long can be done. I mean, subject to your plan, VPOC migration. Now, we have another trade in TraderLab. It's called the IB continuation trade. These are structured trades. I hope you're getting something out of this. You can learn these. Now, the thing you can never escape is randomness. Unfortunately, because that's the business. Now, psychologically, that is your biggest problem. I've worked with a lot of traders over the years. I've coached a lot of traders, and of course, everything that I do, you've done. Every problem, every challenge you've had, I've had. Every moment where I thought I finally had it and then woke up and found out I didn't, you've had, I've had. The difference is I had to figure out what I wasn't doing. And I didn't understand early on in what I was doing that this is a statistically based business and it's not predictive. I also didn't understand that putting more indicators or time frames together didn't solve the problem. It actually created the problem. But because of the winning trades in between, and I kind of created a term called Trader Groundhog Day, working hard, waking up at the same place. This is too low. This is the new retail price. What are we observing? Too low, higher. Too low, higher. Okay? Retail. So this is a structured trade. Let me show it to you. And if you have questions, post them. I'll come up for oxygen. And if I can't get to your questions, if you're in YouTube, use the link in the bottom of YouTube to visit TraderLab. TraderLab's in real time. YouTube has a delay, as you know, and the stream in the Discord in TraderLab on the Discord is in real time. So you might find it more helpful. We come outside. This is called the IB continuation trade. This is an outside edge. What is an outside edge? This is called a distribution. There's the retail price. This is your store down the street. Oh, it's on sale. I'm not paying that. Where's my target? There. Did I hit it yet? No. It's still open. With what kind of probability? You remember. 68%. What does the market tend to do? What is it doing in all fractals and timeframes? This yellow line is the developing volume point of control. In other words, the actual auction. This is the fair price from yesterday's RTH. The market tends to come back and check it. And if it's too high, and there's no precision, think horseshoes and hand grenades. If it becomes too high, then I can go south of the border and return and maybe come back into these levels. And nobody knows, part of that random thing. Now I'm going to show you a short. And these are not recommendations. Let's assume the trend is up. Let's assume if we take any shorts, they're counter trend. Can we agree with that concept? Is the trend up or down, guys? What do you think? Is the trend up or down? Trend is up, right? The trend is up in the daily developing time frame. In the higher time frame, the trend is up. What did we not do so far? Take out yesterday's low, and I thought we had a really good shot. Nada, no bueno. Now, we might come back later, but we got to be here now, as they say. So what do you do with this? Here's the choices you have. Only long continuation trades in alignment, or if you are a counter trend trader that is vetted with an edge, a short to here. Mean reversion. This is the same condition. This is called mean reversion. What's the mean? That, or the median. So if the buyers are here, right? This is why you got to think about order flow. If this is too low and my buyers were here, you could see them. I want some of this. Okay. If I get the counter rotation, what do I anticipate when I saw this buying? And now my VPOC, or retail price, for the whole day so far, remember, multiple time frames, and I don't use the clock, so it really is fractals. So this is the retail price, except now it's up here. If this is too low and this is too low, where's my buyers? Under here. If I come outside, let's come back here. This is my outside edge. This is where they're going. It's too low. And the retail price is going to be here. And I've got this 68% probability of tagging this thing. I'm in for this. How about you? How do I do that? If it pulls outside and I have enough range so it qualifies, I can buy it as a long continuation trade in alignment with the trend. And then my job is to get here and then potentially go higher. Or I have a buy sweep, which sets up my counter rotation. Wait for it to pull outside, get back to the high volume node and continue. That's a valid trade. The other one is, if I find my sellers out in this area someplace and this is too high, I can sell it. And it's counter trend. And you need to know in your plan. Now, I always suggest to developing traders, if you can't trade with the trend, don't think about trading counter trend. And you don't need a lot of trades. You only need trades that have an edge. This is not about being busy. This is about being patient and waiting for your edge. If you think it's a video game, enjoy it and be sure to get the coupon to the buffet. So I got my sellers here. I got my sweep. I got my selling icebergs. And what else do I have? I have a structured trade called the IB continuation trade. It comes out here. What else do I know? Absorption was here. I have a high volume node here that was too low. Let's look at all the pieces. And that's from this auction, which was right there. Let me just throw this in here. I'm showing you structure. And I understand, this will make you crazy. I'm not trying to do that to you, but I want you to learn how you can segment and break the market up into auctions, because the auction is what the market is about. What's too low? What's too high? Well, this is too high. This is too low. Absorption. I'm seeing the buyers. Now, I don't know if it's going to do this, but when it breaks out here, then I know the sellers here are under the bus and the buyers are here. I know the high volume. And what is high volume? It's a retail price. So in this store or auction, this is too low. What else do I know? This is too low. New retail price. IB continuation trade out here. Watch. Where do I test? I test here, and this sets up a long. Now, let's try to see if we can find a way into this trade. You'd have to be on this, and you might not be able to get this trade. I'm just saying. Now, for me, never mind me. Let's just talk about the rest of us. And if I can't get in, but I have a 68% probability, I'm going to say it's a judgment call. I don't have a problem getting long. but this is my obstacle. But let's come back to what I know. I took out the first hour's high, which says the buyers are currently in control. I have a 68% probability. This is a trade I would take, but you need to know whether this qualifies. Support is here. Support is here. This is absorption. By the time I get in, I'm getting in here, and I'm going for this, and then higher. Not a trade anybody ought to be thinking about. And 50. What is 50? It's a strike price, resting liquidity. Let's go back to the liquidity. And this is a short I took. Now, this is counter trend. So this comes into the book, and I know it's a strike, right? 50. Watch. So right here, I take a short, and I'm coming here, and then I'm looking for it to fall out and actually to come here. So this is what I'm looking for. Here to here, and if I can get under here and under this volume, reversion trade, looking for the VWAP, the mid, and wherever it goes. And this is the current VWAP. So let's see where these things were. So support is here, and this is where I was going to go. Because I have another trade, which is called VWAP mid to VPOC. So I'm trading multiple. So if you're in the trader lab, I would suggest, and again, you have to vet this, you only are taking the longs. And you're using trade management. And if you're long and you got your primary target and you come up here, you need to know before the fact how you manage your trade. Now, you would be at least risk neutral. And if it comes under here, you're out, you scratch the trade, and we all get tickets to the buffet. I took a short here. Where am I trying to go? Here. Here. That was my trade. Then I have a long. Now let's look at the long. And these are structured trades. I'm sharing structured trades. What am I doing here? Good question. This is a long. It's mean reversion to there, but primarily to there because of 68%. Liquidity here. Who knows? Nobody knows. Icebergs, absorption, I don't know until here. Sellers are below the buyers. This is a trigger. Come back and test. Let's look again in the microstructure. Now, I'm not saying anybody should do this. It's language. I'm just speaking the language of the market. And I'm as clueless as everybody else. Don't think I know anything. What I know is language. So I'm reading this language. And I don't know ever what's going to happen. We all take stops, so we got to get over it. It's overhead and cost of production. This is a micro trigger. Sellers are below the buyers. You see it? Well, if this becomes too high, and I got this backing me up, this is a trigger, and where's my entry? It's there. If you're using price action. One tick below, stops here, scale here, or there. Now, what else do I know? You're going to ask. No, I know this was too low. Absorption was here. I had buyers there. And where is that? Under the IB. Another scale. And then this. Why? Retail trader behavior. Write this down. Think like a retail trader. Don't act like one. This is a long, so out, long to here. What is this? Mean reversion to there, into the stops. Where are the stops? Under the swings. Retail trader behavior. So under here, and I have no clue. Don't forget, I'm clueless. Mid VWAP. This is a long. Now, where to? Mean reversion. Back there. If you're only trading longs because of context, this is trade management. So it's either a short counter trend or an exit when you can't regain this and you're out, subject to your vetted plan. Then your next trade, if you're only trading in alignment, is a long back to here. Low volume node, stops are going to be here, and then you're looking for continuation. Let's see what it does. Watch. Where are the buyers? Here. Where's my resistance now? Here. Where's my next resistance? There. High variable, high volume node. I'm not paying that. Get out of here, right? What's the language? Too high. So when I take the reversion long, this, I'm trying to come back here. When this drops down, there's trouble. Now, when I put this thing on, right here, and it's the last trade I took, was, and I typically am very uncomfortable initiating trades, but I know this one has a pretty good chance, at least to here. This drops down, there's two possibilities. If this now becomes too high, I can do this. I can hit this and bounce off it and then come down to full session VWAP and fall out the bottom, whatever it does, then it does. What happens here is what? It drops. Now I have two possibilities. Push off and come back here and maybe there, I don't know. But this is now resistance for me. So support, and you know what happens to support. And what happened down here? Buyers are here. See the absorption? Icebergs. Buyers are there. Buyers are there. All these are qualified longs. And yes, my teeth chatter. And this is my scale. And then this is my resistance. Oh, well, there you are. No clue. Notice what we did here. Too high, buy sweep, counter rotation. To where? Too low. Test, too low. Where's too high? Here. Buy sweep, counter rotation. What happened here? Support, sell sweep, counter rotation. Can you see it? Are you guys tracking? How are we doing in YouTube? If you're finding this interesting, first of all, you have an open invitation to the Bookmap Discord Trade Lab community. There's a lot of additional education. There's no cost, stocks, options, crypto, order flow with a high tier tool like Bookmap. Algorithmic behavior, market maker behavior, swing trading, doesn't matter. All markets, doesn't matter. In this process is applicable to all time frames, if you want to call it that. Swing trading, trend following, it doesn't matter. The market or the behavior of the participants is the same in all fractals or time frames. So when I'm operating as a day trader, I'm also operating in this. Too low. Resistance. We couldn't get under here. What does that tell you? Maybe the shorts that are in here are going to be thrown under the bus. I don't know. Not my job. So I can stay in here, but the market got short yesterday. So these shorts are getting squeezed. So you just, as they say, act accordingly. That's from The Departed. You remember that. So the trend is up and we failed down here. That means longs primarily, unless you take counter trend trades. Is this logical? Where's my resistance? Isn't it there? Where's my longs? Continuations align with the trend. It's here. It's here. It's here. There's resistance. Trend is north by northwest. Let's look somewhere else. Where's my stops? Yesterday's high. Where's my value area high? Now let's take a look at another little tidbit. What is the probabilities of getting to the value area high? 56%. What is the probability of taking out both the value area high? Gotta find it. 90. Oh, no. Wrong. One or the other is 91%. We got the value area low. Let me see if I got a stat for this thing. I got too many stats and not enough time. About a 34% probability, but the trend is up. What's the probability of taking out yesterday's higher low? You know this. 87%. So if I missed the low, what would you quote be betting on? Wouldn't it be yesterday's high, which is right here, and the 68 target that we had from yesterday that we missed? You see how you put pieces together? Now, the other part of this, just to keep you centered, is that what happens in here is random. Wheat comes out, whatever happens, happens. Right? Anything can disrupt it. That's what contributes, and it is part of a 100% random environment. Anything can happen anytime. Absolutely. So that's why you need to solve for randomness and not certainty. So if you can teach yourself, train yourself to suppress your emotional triggers, which we cannot stop how we feel in our fear and our need for certainty to avoid risk. I get it. You get it. Then what do? Metrics. If you know over a large sample size under this condition that you have this structured trade that I've shared in TraderLab, or the IB continuation trade I've shared in TraderLab, and you can take these things if you vet them, and you only take trades that are aligned with what we think is the context up, do you have an edge? And do you get paid over time, even though we all have the thrill of taking a stop, overhead and cost of production? If you make it any more complicated than that, in my opinion, you're obscuring what's right in front of you, and you're adding more elements in that create conflict. Remember how casinos play their games. They're very simple, but they only play games with the edge, and they don't change the games. The other thing about it is, if let's say the casino pays the gambler, somebody walks out with a suitcase, $100,000 in cash. The dealer doesn't get depressed and go behind the garage and do something nasty. The dealer deals the next hand. When we have a loss, we are emotionally anchored to how we feel about it. So then we might not take the next trade because now we're fearful and apprehensive. That's an emotional response. We don't want to take another loss. If the casinos approach their business that way, they would not be in business. They only succeed because they deal the next hand, and they're willing to pay the gambler on the next hand as much and equally as the last one, because the only way they get their profits is over time in a random distribution of outcomes. This says rotation, potentially. And what's that? Resistance, microstructure. Is that they only get the profits by playing the game to extract their edge. So as a trader, when you accept to come into this business, it requires you to change your perception and how you approach this. How do you solve for this? It's not by responding to your primal wiring, which is run from the saber-toothed tiger, looking for certainty in an environment where it doesn't exist. And I have to say, most of us, when we start, and this is all of us, me too, the fact I've been doing this going on 46 years doesn't mean that I avoided the same things you did. In fact, I spent more time doing the stuff you do, because when I started, there was no information. 1980, we didn't have an internet. We didn't have PCs. We had dumb terminals, and they were dumb. Technical analysis was new, and it was looked down upon at the time. When I first started, it was called voodoo, and believe me, it had a very bad everything was fundamentally driven, reports, news inputs. So technical analysis was really not, it was classical bar charting back then. That's the first thing I learned, measured moves. Your head and shoulders, all that. That's where we'd start. So that's where I started. But at the time, that was it. So I thought, and what is a measured move? You're predicting something. So I went down a path of prediction. And I was trying to get where market's going to do this, it's going to go there, it's going to do that. Well, I didn't understand statistics. I didn't understand probabilities. I didn't understand what gaming was. I didn't even know I was in the gaming business. Anyway, that's neither here nor there, but I'm going to tell you, most of you guys kind of do similar things, I suspect, along the way. And the fact there's more information today, I don't think is an asset. I think there's so much noise out there. I go out on internet or YouTube and I see the thing that says the only thing you need. I turned, $200 into 20,000 in 6 minutes. Maybe they did, but can you do it? And how, I can't answer the question. I know for me, I needed to get patient and build a process that I could come in every day and follow it and take stops and try to stay in alignment in a random environment. Where's my resistance? Buy sweep. What does that suggest? Potential counter rotation. What does this suggest? Counter rotation. Where's my trend? Up. Where's my stops? Where's my target? Right? And it never has to get there. Right? Are you guys tracking? Is this making some sense? Let's follow the yellow brick road. Support, resistance. Sweep, up. Sweep, down. This is your little sandbox. Now, I'm going to go a little advanced on you here. Just don't get mad at me, because it's probably going to say, it's going to look like it's so confusing. Let's replace the word confusing with random. Okay, so are we okay with that? So now if we understand it's random, we know this is our retail price. We know our buyers like this. We know this is our current retail price, but we know up here this was too high. We have our icebergs. So I have resistance, support, retail. Now, what the market can do is it can rotate, and that's called mean reversion. And in TraderLab, we say, yeah, it's mean. So if the trend is up, and I'm suspecting, because of my 85%-ish, whatever it is, probability of taking out yesterday's high or low, it could still take out yesterday's low, by the way. Don't rule it out. And this is my target from yesterday that I missed. This is the high from yesterday, and I was going there, say Laguerre. I'm still coming for this because the stops are here from the shorts, right? And this is my target. So I'm still going to trade alongside unless this thing completely, does the Acapulco cliff dive. And then I would have to turn myself around and look for structured shorts. Is this making sense? Everything is suggesting, other than this, I'm going higher. The problem is randomness and the possibility of coming out. What do we do about that? We take structured trades. We look at our resistance, which we can detect because we're in TraderLab, and we know that this was too high in the real electron microscope fractal. Where was that retail price? Let's bring it in here. I want you to see trading in fractals, not time frames. That little node sticking out, that's the outcome of this interaction. I'm not paying that. Let's leave the store. Oh, structured trade, VWAP to VPOC. So there it is. That's your scale. Back here, too low, long against this. Back to here, sweep. What does it say? Back to wherever, absorption. Back to here. What does it say? Resistance. Back to here, sweep, absorption. What does it say? Back to here. If I get above here, where's resistance? There. If I don't get through there, then what? Back to here, and maybe out the bottom. That's what I know. Now, let's think for a moment. How do we use this? I'll tell you what I might do, and you have to vet everything. How do you trade this, right? Well, that's where your plan comes in. You might not know, and I don't either, what's going to happen here. But I know what did happen here, and I know the sellers absorb the buyers up here. If I come back to it, even though the trend is up, I get a sweep, then what's happening here? The sellers are still absorbing up here. If I know the buyers are here, I now have my support and resistance, right? Support is here. Resistance is there. Fair price is here. What can I do? I can rotate. If I get through here, going north. If I can't get through here, I can take the longs out that are sitting under here. If this, then that. If not, then what? If this is too low, if this, then that. If I can't get over here, then what? Then south. If I come back here, if this is too high, then that, which I don't know until it is. There's my sweep. Yeah, there's a buy and a sell sweep right here. Too high, I come back here. If this, then that. If that's too low, then what? Then back here. If this is too high, then what? Then back there. And a sweep. What does it say? Too low, maybe. Then what? Then back there. If I get above this, then what? Then there. If I get above there, then what? North. If I can't get above there, then what? Rotation. That's what I know. And what do I do with this? How about trade management, scaling, go from here to there, or go from there to there. What's going on here? Need to get through. If I don't, trade management, maybe out of the trade, who knows, right? Support is here, support is here. And these aren't trade recommendations. Outside edge, down here, low volume node. The market could go into rotation. And the thing, of course, with the thrill of all this is from where? So I have stop sitting under here, and I have the IB continuation trade, which was along over here. Well, this is too low. This is too low. Support is here. I can come out here, rotate, take it out. I can come down here. And for me, I prefer range, but I can trade any range that fits my trade plan as long as I can get risk neutral. Support is here. Let's watch. This is now resistance. Can you take a trade in here? Do you feel lucky? What do we have? Sell sweep, location, obstacle. Now, and where does this thing fail? Down here. So I have no range, but what I have is in the fractal, outside, retail, outside, too high, I can do this. I also know retail trader behavior. This is support, but where are the stops? VWAP, mid, and wherever. So in the Trader Lab, what I always encourage is that you continually narrate the behavior, because the auction could care less about risk, reward, and range. If we learn the language of the market, we would know this is support and that is resistance. Now, why is that important? Because if this happened out here, it's the same trade to come back there. When it happens here, I'm going to observe it and narrate it and mentally interpret it, the language, but I cannot trade it because it's not qualified in my trade plan. But that doesn't mean I disengage. It means I anticipate. And remember where the stops are, right? So this could be a trade management, or you're just hanging out and you got risk neutral and your stop's under here and you scratch the trade and you go, great, good job. How do you measure yourself in this business? Trade plan and following. Only taking trades that have an edge, knowing where your trades are going to show up, understanding market mechanics, attempting to get risk neutral or take a full stop. You get risk neutral, basically you bought a ticket to ride. And then the outcome is random. Does that make sense? Please give a like if you're visiting in YouTube. Support the channel. That's about it for the channel. If I was going to say, what does it cost? A like. That's a thumb up. That's not too expensive. You guys all have thumbs, right? Hopefully. So in YouTube, give a thumb, subscribe to the channel. There's a lot of other education going on. Where's our support? Not a recommendation, right? Let's watch. What makes this interesting is the behavior. This is the auction. The range is what we need to qualify. This is qualified based on what we know. We also know there's longs. You see, you have to always think from both sides. It's like, well, we can come outside and come back here. That's one part. If we can't get over this, then what? We might come out here because maybe it's too high. We know this is too high in a fractal, and nobody predicts anything. What I know is, and this is what I know the buyers are here. I know the buyers might be here, and that's my obstacle. And I know if I can get over this, I can come back here and maybe come out the top because I have that probability. I know if this whole thing falls apart, I could fall out the bottom also. That's what I know. So I don't know anything more than that. Let's watch what happens right here. So remember, this is a structured trade from here, actually. And this could work also, and that works. But that's your resistance. I'm okay taking that trade. I cannot initiate here because of the range. But if I'm already long, I'm hanging out, working on my crochet. And the worst that'll happen, if I'm following my trade plan, is I scratch the trade and this falls apart. And then I'm still not done with the longs. I'm just going to look for a long at a different location for mean reversion to come back there. So, and that's not a recommendation because depending what happens, if this starts doing the Acapulco cliff dive, I'm going to turn the barge around and then I'm going to be aiming down. But at the moment, I have no reason to look for a short unless I'm a counter trend trader, which, you know, for this stream, let's assume we're just trying to get aligned with the dominant side. When you're doing a trade plan, you need, and I always suggest to developing traders, you don't trade counter trend. If you can't be profitable trading with the trend, you will not be profitable trading counter trend because the metrics are going to be different. By the way, I just spilled water on a keyboard here. That's usually not a good thing. So I'm not sure what is going to happen going forward. Just so you know. Are you guys tracking? How are we doing in YouTube? How about a couple likes? I don't see too many likes. Maybe you just don't like this. That could be it. I don't know. Or I think the thing I can suggest, come to Trader Lab. There is no cost. Use the link in the bottom of YouTube. The Trader Lab community is available to everyone. This is about the business of trading. If you're interested in the business, I suggest you come to Trader Lab. There's 60 PDFs you can download of structured trades, statistics. The Trader Lab is a community of like-minded traders who come together to leverage their collective experience. This is about learning to trade. Then you slice it and dice it up into the fractal or time frame that aligns with your psychology. It's not doing what I do. I'm sure you guys can do it better. It's about what works for you. What I do works for me because the way I trade is I go for the broader strokes, risk reward, right? I believe anyone can learn how to trade. If you're interested and you keep waking up at the same place, use the link in the bottom of YouTube, visit Trader Lab. There is no cost, and please leave a like on the way out. Thanks for visiting the lab today, guys. Appreciate your time and interest, and I look forward to seeing you tomorrow.